This conference will now be recorded.
Welcome everyone. It's Traders Exchange on November 13th. Before we begin, a quick disclaimer speech. We must provide a disclaimer that the following information provided is not investment advice. Our methods, teachings, and content are for educational purposes only. All materials and lessons are protected assets of Market Making Strategies, LLC. Any plagiarism or sharing of our content is strictly prohibited, and any violators are subject to applicable laws. Now, let's begin. So, Traders Exchange, for those of you who are new to this, it's what we're basically doing is midweek, 12 o'clock. I will be answering questions that you have sent in prior to Milan about anything that you have and an understanding that you need on, or questions that you have. This is the time to have them answered. This is what the hour's for. It's for you. So make sure you are constantly writing down questions, understanding what you need to do to improve, where you're hitting certain barriers. So that way, on a weekly Traders Exchange, if your question is already in and up, then I will be able to expand upon it. So that being said, the first question that we have in front of us is, what is a take bar within a stock? My current understanding is that it can look semi-similar to a trigger in a stock, and its purpose is to take orders and then shake them out. How can we better distinguish a true trigger versus a take bar? Also, does a take bar reveal any information about the timing of the trade? Okay, so a take bar in essence, quite simply, is a market maker, and the reason it's a market maker, because you're going to have a significant amount of capital in order to acquire a bunch of shares at the same time, which is basically what a take bar is. That is them saying, I want to buy up all the shares between 2 points. So it could be between X value and Y value. So for instance, if we were looking at BTCS above 4 not too long ago, that is a take bar. They came in, as you saw in the room, and they bought all the shares up to a certain point. A take bar is nothing like a trigger. A trigger, quite simply, is moving the stock from the area of build and towards the price target it was building for. So for instance, if we just stick to BTCS, if they are building between 4 and 450 this entire time, which is what they've been doing, and we know we have prints at 5, once they've completed their build between 4 and 450, and if they wish to release that build or that position being built today, you would see big volume coming in. And in this particular instance, you'd probably be looking somewhere around about over 1 million easily would need to come in. But you could start off at anywhere from about 650 to 700,000 shares waxing in. And you want to see short-term or prints or alignment. So that means that those who recognize that this is the moment this is going to release. And that volume would be indicative of, we have done our building and now we are going to move towards 5. That's what a trigger is. A trigger, quite simply, is when they are ready to release the build position and move towards the target. What does that look like? Quite simply, it's the same type of volume that you would have seen it used to release last time. So if we looked at BTCS, you can see around before 10 o'clock, it was anywhere in the range of 1.5 to 2.5 million shares is what moved the stock from 4 all the way to around 550. So once that volume came back down after 10 o'clock into this consolidation, and the volume is in this valley, they have used that time to build a big position which they intend to move, quite simply, far further than 5. But 5 would be our first target, given it's a psych level. But you did not build between 4 and 450 to simply hit 5. This is more the type of building. And if we just looked in a quite simple sense, this is the type of building that's going to get to a minimum of 6. Where would we look for a trigger of this form? Well, if you know it's building between 4 and 450, you'd be looking at a trigger with the right volume, alignment of a small print personality above 450. Why? Because the build is between 4 and 450, so the release would be above the build area. So that's what a trigger is. And in a take bar is someone simply saying, I want these shares now and I don't care if I'm buying it all the way up and my average is like that. Typically what happens in a take bar is two things. Usually if the volume is high enough, so trading money time volume, then yes, that take bar would be a lot sooner. If there's a take bar in a consolidation build, there's two things are happening. Typically, it does say timing is now coming nearer, but it also gives sometimes an indication, a take bar, that it's going to happen today. Because if it wasn't going to happen today, then they could easily just purchase their shares at the bottom the same way the build is happening. But either way, whether you see a take bar or no, it doesn't change the fact that a take bar is still considered building, still considered taking shares. But if you don't see the volume that you need to trigger the position, to trigger the build area, then it's simply a take bar for now. Does that answer the question for whoever that was? Because I can't see who it was. Next question, Milan. What is the difference between money time and exceptional build in both scenarios where they are going? What is the difference between money time and exceptional build in both scenarios where they are going up quickly? How do you recognize them? Simple. Money time is releasing a position to get to its target. That means that the money flow or substance in the bars would see a far more retail and a smaller print personality that will continue and help move the position, but more importantly, your build is already done. So while you don't need to see large prints, you'll see prints that are relative to high volume, an indication that it's money time. The exceptional build works differently because they're using all the available volume to simply buy and acquire a massive position. What usually the reason they exceptionally build and not just build going down or sideways is because in essence at the same time the market is deeming that the valuation of the stock is also gone higher. So they're taking it to a higher valuation, but on the way up they're purchasing all the shares that they can. Next question. Are we chasing?
Another part to this question.
Okay. Are we chasing an entry in a stock? Are we chasing an entry in a stock, or do we want to see some form of... First of all, whoever wrote this question, everybody type in the room right now, chasing is not trading. Chasing is not trading. Could you all please type that in the room? Every single one of you type that in the room. Even considering the word chasing is gambling, hoping, FOMO. So, when you're seeing an exceptional build, remember one thing. They are acquiring shares. They are not looking to meet any price targets. But naturally, if you are buying and everybody's rowing in the same direction with one intention to buy as many shares as they can, especially when this is considering these are all market makers, they're going to take it to formidable levels above. They're going to take it to the next level. Why? Because as I pointed out, the market is also deeming that the valuation is higher. So not only are they buying all the shares, but when you buy all the shares, you're going long. You're going to take it to the next levels. Now, how do we get into an exceptional build? Well, sometimes you'll see it really consistent volume. So choose your levels wisely and make sure the clarity and consistency in the strategy you see remains. But a lot of times, even though it's exceptional build, that you have moments where the volume will slow down. So what you're really playing is the volume. So you want to make sure the substance hasn't changed, which means the strategy remains, that all they're doing with the volume is purchasing or acquiring shares to build a massive position. But when you see fluctuations in volume or it comes down for a bit, that basically that will bring it down possibly to a level where you can find an entry. When you're doing that, just make sure, no matter what, that that volume is looking like it's not waning off, so that the exceptional build is coming to an end, but it's just slowing down, which will give you an opportunity to look for an entry. But you never ever want to chase, no matter what. That word should never even be used. Chasing is for retail, it's for FOMO, it's for missing out. When you are planning your trade, then you're never going to be chasing an entry. Okay, next one. Oh my word. What is this? Milan, we gotta talk about this.
Yeah, I can skip to the next question. We can come back to this one.
Yeah, like you got my word. For IONQ, no, just go back, please. Go back. Go back. If this takes the remainder, it takes the remainder. I can't just go. We can't just do all the questions. We got to take our time and break these questions down. For IONQ exception long trade. Oh my word. For IONQ exception long trade yesterday. Now, Jet, please, everyone remember, I can't remember every single trade that happens. That's going to be really hard to do. Ask me effective questions about something that happened, not an overall play. That's just not realistic. But let me see if I can give this a chance. For IONQ exception long trade yesterday, what was your risk? Assuming you got in, well, I would never get in at 23.40. That's right under 50, so that wouldn't even be an entry. Assuming you got in at 23.40 in a stock that moves in 40-cent bars. We don't look at stocks that move in 40-cent bars. We don't worry about the bars. We look at the increments it's trading within. How can you risk 20 cents? You can't, because that setup doesn't even make sense. Given that the trade is 90+%, were you willing? Who wrote this question? Are you willing to say, come on here, please? Because I'm so confused by this. Every part of that question is not a trade.
Oh, he's not in the room right now.
Who was it?
It was Trevor.
I don't know why. What is Trevor thinking in that question? First of all, let me break that down. And if he's going to ask questions, you should be in the room. 23.40, is that ever an entry? Milan, anyone who wants to come on, raise your hand. Milan will let you speak. I've told you guys before, I'm not going to sit here and lecture. You guys will not get better as traders. You need to participate. So, is 23.40 ever an entry when 50 is right above? Milan, you just speak.
No,
Why?
because we have a major level right above like 23.50 in this example.
So could that ever be a 90+% trade in any way?
No,
Do we measure the movements of stocks based upon 40-cent bars?
no, like you said, it's based on the increments.
So 40-cent bars is simply how they're trading it. That doesn't mean that it's trading between 40-cent bars. It's trading between increments. So to get in somewhere where you cannot get in needs to measure level. Then you're strategizing a stock based on 40-cent bars, which is not part of our formula. And then how can you risk 20 cent? The reality is that whole formula doesn't make sense. So are you risking 20 cents? Or let's be honest, if it hit 50 and bounced back 30 cents, you don't know how much you're risking, do you? Where should the entry be in this? What if we had to look at this, even in an exceptions stage, especially in an exception, do you need to get in under 50 if it's exception? Or will you have plenty of time to get in above 50 with everybody else?
You can get in above 50 with everyone else. Pay for that
Exactly.
confirmation.
So, wrong question. Definitely not the way you want to trade. That is a very, very low percentage. I don't even give that a percentage, to be completely honest. When does 2340 be a possibility? Someone give me a quick scenario before I do. Do you think you could give me a scenario here, Milan?
I think so.
Okay,
Let's say they're controlling prints at 24,
good
and
boy.
prior to the controlling prints at 24, 2340 was holding. There was a
Good
market maker
boy.
there,
Good
and we
boy.
saw a nice pullback to 2340. That would be a level we can take a trade off of.
Absolutely brilliant answer. Spot on. Say that one more time, but do it a bit slower for everybody in the room because I love that answer. It's perfect.
So the only scenario, at least the one I have for in this case, is to take a trade off of 2340. Is if we had controlling prints at 24, and these controlling prints needed a pullback, and we already had a market maker established at 2340. In that scenario, we could take an entry off 2340.
Love it. Perfect. Thank you very much for that, Milan. I can quickly identify whether stock is going to a high percentage, but I often get stuck on what to risk for these types of trades. Okay, so let's answer that. If you can make it 50 cents, Milan, how much are we looking to risk?
About 12 to 15 cents.
Yep, and if we were looking at a $1 possibility trade for our price target, Milan, how much, honestly, max would you want to lose? Risk, I'm sorry.
Risk maximum like 25 cents.
And even then at 25 cents, you want to be careful. So if we know, Milan, that the calculating mood is 250, how much are you willing to lose?
A quarter of that.
Are you honestly willing to lose? So if it was $2, that'd be 50 cents.
50 cents.
So are you willing to lose 75 cents on a trade?
No.
Because if it's $2, you're willing to lose 50 cents, right?
Yes.
So this would be, I'm sorry, this would be about 62, 63 cents. But let's just make it clean. 50 cents. Are you willing to really lose 50 cents? Do you need to lose 50 cents?
No. You don't have to. You can look for a
I
trade with more favorable risk to reward.
Now, if you said to me, the reality is, Doug, I don't, even if it was $1, 250 or 5, I'm not ever going to look to lose more than 25 cents or 30 cents max. Why? Because if you created formulas where it was always 1 to 4, and you took a few trades that had the potential, and we outlined a build at 25 could give you had a 30 price target, and we had 2 or 3 plays, let's say IONQ, Mara, OKLO, and that was how you based your risk assessment. How would your entries look if you allowed yourself up to 75 cents of a loss? Do you think you'll be a disciplined trader with disciplined entries, with a strong foundation on making sure that you're correct in how you enter? Or would it also allow for you to keep that far looser, knowing you got 75 cents that you've allowed yourself to play with?
Yeah, you're giving yourself more room at that 75 cents versus, taking a part of that trade versus the full $5 you can,
There you
split.
go. Great answer again. We don't need to take the full $5. You take the high percentage amount within. And when you take the high percentage amount within, you also remain a solid trader. You must remain very disciplined. Because as we were saying, Milan, if you allow yourself and say, okay, it's a $5 trade. So technically 1 to 4 means $1.25. Are you seriously going to sit there and be so what do you call it, based and so disciplined to your formula, or are you going to allow yourself a bit more or a lot more leeway? You're
Yeah,
going to allow
give me
yourself a
this.
lot more leeway. So then, if you allow yourself a lot more leeway, you can keep yourself off mute. That way, it's easier for us to conversate. If you allow yourself that much leeway, then here's the reality. How solid do you think your habit will remain?
It won't be that solid.
No, it won't be. So I always say 50 cents. Personally, I'm not trying to lose more than 15 cents, which is exactly what Millen said. Anything above $1, I don't want to lose more than 25 to 30 cents in it, as my risk tolerance. Just because if I start allowing myself to lose 50 cents and 60 cents and I get 2, 3 of those in a row, how hard, Millen, is that to come back from being already down $1.15 a day?
Yeah, it doesn't help your trading at all.
And are you going to trade correctly, or are you just going to look to revenge trade and get your money back?
Possibilities are you going to revenge trade?
So have a very tight stop. Make sure that your entries are really planned. If you do that, you won't have this issue. And something Millen said, which I really like, really appreciate, is the fact that you don't need to take it all. Take what's in the middle that's a high percentage. And that was a great answer from Millen. So, Millen, thank you very much. Excellent answers on there. Okay, let me just keep going. Once it runs out, manager calling. If you no, stay there. I haven't gone back. Go back. I'll tell you when to change, right? If you were to say risk is when you know the higher percentage outcomes does not work out, how could you know in many cases without risking more than 20 cents? Reflecting on these types of trades, it is clear what the tape is saying to a high percentage. High volume or buying, no selling. What does risk really look like in these trades? And what does the stock look like when the trades does? Jesus Christ, he's really got me confused in this one. Okay. If you were to say risk is when you know the higher percentage outcome does not work out, how could you know in many cases without risk? All right, I'm confused by this, Millen. You're going to have to ask him, and please make sure their questions have proper grammar because I have no idea what he's saying here. My answer, go to the next one. I really have no idea what he's saying. Okay, number 4. My question is about entries based on key levels. How do we determine the best entries when we are planning for a trade off of a key level? Let's say a key level is 360. Is 360 ever a key level? I'll start choosing people to speak if you don't speak.
Doug, this is my question. On this, I just meant like the market maker previously shown a large position at 360.
I figured you might have said that. Okay, so you meant key level as in that's the number that they've chosen for the day, correct?
Yes.
All right, perfect.
Yep.
Okay. All right, so stay on, Shams. It's your question. Let's talk about it. So let me just read it one time quickly. My question is about entries based on key levels. How do you determine the best entries when we are planning for a trade off or above a key level? Let's say a key level is 360 with ask prints at 4. So very similar to what Millen was saying prior, that if you had ask prints at, I believe that was 240, so 3, and it pulls back to where the market maker has single-handedly chosen a certain price to use as theirs for the day, would be very similar to what Shams is asking now. Let's say a key level is 360. So imagine 360, we saw a far higher print personality, and we saw a market maker really take control of that particular level, which technically doesn't mean much overall, but they want to use that number. How do you determine the ideal entry point? What does the volume need to look like? I imagine we wouldn't always get a typical release bar at these key levels. Okay, good question, very simple. First of all, I would need to know what the volume pattern is. You'd have to give me an indication. So let's say your high volume in this trade is 500,000, your valley volume is 200,000. So if it hit for ask print, satisfy the 4 AP. Okay, so let's just say there's nice ask prints at 4. Before it went to 4, 360 had nice prints too. So what would happen is this. The high volume takes it into 4. That's where we see that they're acquiring shares. Then it might either dip down a bit in volume and come back over 360. 360 is a key level and a special level because that shows where the market maker is sitting. So the key is, why would it break a level where he's at with money on top when he's controlling the stock? So what you should see is it comes back down. So a little bit of selling possibly to bring it down. So calculated selling, selling used for acquiring, selling used to bring the stock above 360, where you want to see some short-term money coming back in. So short-term ask prints, volume increasing. But remember one thing. This wouldn't be a release bar, would it? it would simply be trading back to the area of build. Release bars release a position. So the type of volume that you need for release would be far larger because it's now getting away from the area of build and moving toward its price target. So when you're talking about an entry below the build, you will not be looking at release volume. You're going to be looking at volume sustaining and the money flow to show that the volume that is in that valley is going to be used to take it right back up to where those 4 ask prints were. Make sense?
Yeah, thank you. That was very good.
No problem. Next question.
That was our last question, Doug.
Okay, good. And let's stick to 3 to 4 million. And do me a favor, could you please check grammar? Mine's so
sure.
terrible as well. That sounds, Trevor and me probably type the same.
No problem. You got it, Doug.
Perfect. And just let Trevor know that he's more, bring that back on for next week if he needs more clarity after listening to the recording, okay?
Sounds good, Doug.
Right, anyone else, please? We got half an hour more, plenty of time. I'm here. If you have questions about anything you don't understand, you can ask me about options. You can ask me about what happened today. If there was something confusing to you, anything you want, please ask now. These sessions are literally, this particular Wednesday, 12 o'clock, is for me to answer questions. I do not have anything prepared. I do that on Tuesday for the beginners, and I do that on Thursday for the advanced. That's where I am really teaching. This is me answering questions individually so I can help progress whichever stumbling point or whichever problems that you're facing currently so we can keep moving you forward. So if you have questions, please answer. If not, we're going to end the session.
I'll stick on this question that I asked too, just to actually clarify
please.
the question. So if we're getting towards 360 again in this hypothetical world, and you said that we don't necessarily want to see release volume because we're not
well, you won't see release
position.
Volume.
Yeah, okay. So you won't see release volume because you're not releasing a position.
Yeah, it's still in build mode, isn't it? So if it drops and goes down from 4 to 360, it's building, isn't it?
Yep.
It's building within that quadrant, within that area of 4 and 360. So you are still in build mode, whatever the case may be. What you find yourself doing at 360 is setting yourself up to enter exactly where the market maker is sitting, which means that's technically the strongest and highest percentage area of entry, but also the safest place to be. Easier to manage when you're sitting right with the market maker, isn't it? Because who's in control of the stock, Shamsi?
Market maker.
Whose position is being built? Is that him sitting there and holding it up for someone else, or is that him building a position?
Him or her.
Exactly. So if they're controlling it, they're building a position, and you have entered exactly where they've said is their number. Could you get a better entry than that?
No, you can't ask for better.
The only difference in this situation, Shamsi, is what phase are we in again?
Build.
So what could that mean, even if you've entered compared to the money time phase?
I mean, volume could just completely disappear, or
you got those functionalities, but let's just say let's stick to the fact that it is building. It's not going to break 360. But it could definitely, you could be sitting in that position for a little bit longer than you expected if they still got more build. It could hit 4, put more prints there, and come right back and build more above 360, go back to 4, stay in between, and then 10, 15, 20, 30, 40 minutes later, volume might come in. So the difference about entering under build phase is you got one, make sure you've got your read correct. So like you correctly said, Shamsi, if it's dropping off in volume and it doesn't break below 360 and continue building that way, I agree with you. But if 360 is solid, the volume is high, it's actively building, for the most part, that's not going to happen. But what can happen, and happens a lot, is you'd have to end up sitting in your trade a lot longer and being patient until the release phase comes. In the release phase, it moves away from your position really quickly and starts working its way towards a target. Those trades could be completed sometimes in 2-3 minutes, sometimes in 10-15 minutes. But if you're going to enter in the safest high entry position below the build, then there's a chance you might be sitting in there for a while, right?
Mm-hmm.
That's the only difference. But the difference also is it can be a more safer entry on release because you're moving away from your position quickly. That allows you to have a huge risk factor alleviated. The risk factor is a lot larger when you're buying at the bottom of the build. And again, you're reading it correctly because it could literally go back up to that 4 and print again and come back.
Mm-hmm.
So that's the difference.
No, I like that. Thank you.
Yeah. Good question, by the way. Like that question. See, come on. These questions are helping all of you. All 4 of these questions, plus what Shamsi just asked, these are questions that are helping all of your trading. So I'm sure there's got to be more than that.
One question, Doug.
Sure. Just let me finish one thought, Millen, and then we get on to
Go
you.
ahead.
Exceptional build. I know I type this in the room and speak on this a lot. Why do I love exceptional build? And why is exceptional build, especially for a couple of days, so beautiful? That sets you up for a very strong options position. Everybody piling in, valuations increasing, opportunity to move towards targets. Timing is a lot sooner. Just want to finish off and let you guys know a big hint or a big tip about long-term strategies. Exceptional build, especially when it's going on for a few days, like IONQ, like DJT did, like OKLO did, like HIMS did, or HIMS is doing now at 30. But is HIMS at this point, Millen, exceptional build, or is it just building under and at 30?
It's just building under and at 30.
What is IONQ?
It's building beneath 2750.
I've seen more exceptional build because it's still building and printing for the most part at a lot of levels for the last few days. What about Mara?
Mara is not, it's just traditional building.
Yep. But is it the type of building that says one person likes it or many big people like it?
Many big people like it.
What about IONQ? Is that one person you've seen over the last week, or would you say there's a lot of interest and a lot of big positions being taken?
A lot of interest and a lot of big positions.
Do you think it makes a difference that even with great volume, even though it's up somewhat 300-400% since the last couple of weeks or whatever it may be, do you think it's even better that every level it goes up, big buying keeps coming in?
Yeah, that's a great sign for the long-term prospects of that stock.
Absolutely. So that was your little pro tip for which strategy really plays well into options, the exceptional builds, and when you see it going higher, if it's not exceptional build, but building at every level. So ask your question, Millen.
Yeah, so my question is talking about, the open, right? So normally in the pre-market, especially with the morning meetings, we have a few stocks, and we obviously want to focus on the highest percentage one at the open. So after the open, especially as a trader in the learning phase, how do you balance understanding the trade and kind of the results and outcome of what happens at the open and how it may or may not align with the trade, the percentage we're looking for, or like our trade, excuse me.
Say that again
And
one more time. Sorry, I'm a bit confused on it. Say that, slow it down and say that one more time.
so at the open, right? Let's say we already had a few stocks, like 4 stocks planned from the pre-market and the morning
Yeah.
meeting, and we're going into the open now. And I would obviously focus on the highest percentage play going into the open. Especially at my phase, I can't focus on multiple stocks at once, so I'd be focusing on one. So knowing that there are other plays developing, how do you kind of transition from that one play you were focusing on at the open that might have not have come into fruition as planned, and let's say gone into that other 20% possibility
Yeah.
within that, let's say that 80%, and learning from that one, and then transitioning on to looking at something else.
Yeah, perfect.
Just from
Good
your
question.
experience.
No, it's a good question. So that's why I always say to you in morning meeting, plan what the trade needs to look like. And not only for the percentage, the high percentage portion, but the opposite side. So if you start seeing it's working into a high percentage to the opposite side, one thing that you're going to know is the timing is definitely not sooner. And two, you know that it went into the opposite side, which means that the chances of this now coming back are less. So the first thing you want to do is, if you've got high percentage plays, let's say you've got 2 high percentage trades, the one that starts doing what it needs to do and what you planned it to do is where you want to put your attention first. If a trade is not doing as you planned it to do, but it's doing what the other portion is, so the 20% you didn't expect it to do, or to a lower percentage it should do, then that's what it's doing. Now, if you've got a 90% trade setup and everything you see is in the 10% realm, does that make it a very high percentage 10% trade? Meaning, is that going to happen to a high percentage and not do what we need? Yes, absolutely. So remember one thing. If you are planning what your trades look like going into the open, then they should at some point in the next first 5 or 10 minutes start showing that it's building for that plan. If you don't see that, then go look for the other stock or 2 or 3 which you should have up on your 6x6s and see, are they playing and doing what that you have planned for them. What you don't want to do is jump around. When you jump around, you dilute your ability to stay focused, and a 90% trades quickly turn into 50% trades because you're not focusing on them. When you're not focusing on them and you're just looking for the next move, everything becomes diluted, everything drops in percentage just simply because you are not astute for that trade. Remember one thing, Milan, how many trades do we need?
Just one trade.
Just need one trade. You've got to earn the right to do multiple trades or trade effectively. It takes time. That's why I always say to you guys, and keep saying, the one thing you never want to lose is the joy and fulfillment of trading. And if you have the joy and fulfillment of trading, you're going to really appreciate taking your time, piecing the foundations together correctly, so that once you have built those strong foundations on great habits, on great structure, with love and commitment and passion, you will naturally start flowing and be in a flow state with the market. And you'll quickly realize how you can switch from trades, how you can add a second trade. But for the level that you're at, especially if you're a novice, all you got to make sure you're doing is, if you have planned the 2 options for a stock prior to open, and whichever one is moving towards the high percentage and you can see that's happening, that's where you're going to focus your attention. Do not get stuck into looking at a stock that's just flying. That doesn't necessarily mean it's a trade. More importantly is, if you haven't seen why it's moving quickly, it's not your trade. You're not even set up to trade it. You're not prepared to meet that opportunity. So take your time, be patient, and stick with the stock. When I first started trading, one of the bad things that I did for years is jumping around. And what's that called when you're jumping around? What are you basically inferring that you're doing? FOMO. You don't want to miss out on nothing. There's plenty of trades and they come every day. Your goal is to be ready and prepared to trade the right stock correctly. So even if the trade that you have really planned doesn't do what you're supposed to, that's a learning experience. Look around, set yourself up, look for another stock that you had already planned for, switch over to it, see if that's doing what it needs to, and if that's not doing what it needs to, that doesn't necessarily mean that you switch. Maybe you just need to be more patient. Let it open itself up to the trade a bit more. Let it play, let it do what it must. It might be moments away. It might be 5, 10, 15 minutes away. But let's say it's slowly progressing into the trade you planned. The beauty about it taking a bit longer is it's going to feed you more information. It's going to validate what you planned for it. It's going to help you organize it a little bit more. It's going to give you confidence that you made the right read, especially when you're a novice. Make sense?
Makes sense. Thank you, Doug.
Yeah, no problem. Anybody else?
Hey, Doug, can you hear me?
I can hear you. Who's this?
It's Austin.
Hello, Austin.
Hey, so I just had a quick question. If you recall, at Onsite in Miami, we're kind of talking about writing down key levels as a stock is actively trading. I believe you called it the house technique. Do you still do that?
Yeah, I do. So, house technique would be for a textbook trade, Austin. So,
Okay.
so basically, what that would be is they build a house at a certain psychological number or level or a major level. So, they are basically saying we are sitting up here and we are going to hold this strong and build underneath. So when it says a house, the reason I say house is that level has become so strong. So for those of you who don't understand what I mean, let's just say we're looking at to make life easier, DJT. DJT right now is at 29.50 or whatever it is. Let's just say it got to 30 and they put 8 prints, and then it traded down to 29 and building and went back up to 30, 10 prints. Then it came back down and build and 29.50 and then went back up to 30 and 10 prints. Every time it prints more and more at the same level, it's building a house. That means they are solidifying that level as theirs. So, in essence, when you solidify a level to that strength, those pullbacks are going to do 2 things. Get shorter if the volume is high enough and sustaining, or those pullbacks are going to get greater because they are showing you they need to build a lot more. What does that open it up to? A far better entry. Let's say the 30 ended up pulling all the way back to 28.50. Now you know you got that, but it got an entry far below the market maker. But it also, you got to be careful that if the volume wanes off as they're building a house, at some point it's going to transition into building by going lower on lower volume. The flip side to that, let me ask you, Austin. Let's say it stays in a very tight, controlled, real consistently nice volume, consolidation between 29 and 30. It prints at 34 times. What must it look like in order for that to release from it being built as a house?
If it has consistent volume between 29 and 30, I'd anticipate more volume than the consistent volume on that release.
Why? Why is that? I'm not saying you're wrong. I'm just saying I'm asking you questions. So why would
Right.
they need to show more volume if they built that much?
Because they showed you the benchmark of building volume, and obviously you can't release a stock on building volume, so you have to anticipate more.
Yeah, because in the end, if it took X amount just to acquire a position, it would take far greater consistent volume to then release that position and trade it into a target and meet their target. Because if you're trying to now take someone's holding 1 million shares at 30, do you think somebody holding 1 million shares at 30 is going to be able to trade that position with 300,000-400,000 shares a minute?
Probably not now anymore.
And why is that?
They're simply not able to distribute their shares with that amount of volume.
That's it. That's the only answer you need is how are you going to get out? Right?
Right.
And remember, it can be psychological daunting to think, I see the market maker built between 29 and 30, and then think of it as though he sits there while retail come in above 30 and move his position. No, he's technically controlling the position and moving it to his target. He's always in control. So he needs far more retail participation in order for him not only to get to his targets, but as Austin rightly said, for him to redistribute those shares back to retail, which means selling them and making a profit. So absolutely, there you go, Austin. Good enough?
Beautiful. Thank you.
Yeah, of course. Anyone else? Going once, going
I have another question,
twice.
Doug.
Oof, you just got in time.
I have a question on like just the amount of prints that we'll see at levels. So I know that this has been discussed before, but I'll just use 4 again for sake of example. But let's say we have like a print personality of 10, and then we're at 4, and then like the first time we hit at print personality.
All right, first things first, would you ever have a print personality of 10, or would the 3 to 4 be the print personality and the 10 be the controlling prints?
Or I just meant like 4 is in the price. Like,
Okay, but
yeah.
would 10 ever be, so you say 10 prints as a print personality?
Yeah, I know that's a little high.
You're never going to get that. Where
okay.
would you see 10 prints as a print personality? In what type of strategy?
It'd have to be like a everyday stock.
No, you're never going to see 10 prints. I've never seen 10 prints as a print personality.
Yeah.
I mean, could you imagine how many millions and millions and millions of shares per minute would trade for a 10 pp? And when it's a 10 pp, do you think everybody's looking to invest that much into short term?
Yeah, that's a lot.
You got to think about it. A lot of this comes down to just common sense, really, isn't it?
Yeah.
So
yep.
a print personality is never going to be more than, maximum 4 to 5, because what is print personality entail? Typically the shorter term. What do we need to do to get in just to move it? The large prints like 10 and above is controlling. Those are the ones that are showing the build size of a position. So print personality would never be that high. So let's go ahead and say 4 to 5 print personality. Okay, so high volume, 4 to 5 print personality. So let's go from there.
Yeah. Okay. Thank you. So 4 to 5 print personality, and let's just say at a level like $4, for example, we keep on hitting it at print personality, and then there's 2 different situations where the amount of prints increases. So instead of 4 to 5, we start to get prints above print personality. So then we get like 6, and then maybe we get 8, or we get 10 later on, which is clearly a larger build. Does that kind of signify to you that it needs more build then if we're increasing the size at a level? And then kind of the same question for if we decrease the amount of prints at a level, if we go from like 4 to 5, and then all of a sudden the next time it hits, it's 2, and then it hits again 2.
All right, so you're talking now those prints being controlling prints, right? Decreasing?
Yes.
So if controlling prints are decreasing, that's giving you an indication of timing of release, because now they're saying we don't need to build as much. If we don't need to build as much, that means we're getting close to releasing the position. If they release the position and it's a small print personality, then you know it's technically that one market maker who's now controlling his position. If you see it release and you see a larger print personality, that means typically other people are coming in and saying, we have far greater range than what just this market maker. This market maker's position is for 5, but we're coming in at 5, 6, 7 prints, saying 5 is not your number. We have further to go. Those type of prints say we are coming in because there's more range. Make sense?
And that's on the controlling prints decreasing side of things.
Okay.
Is that the same? Or not, obviously it wouldn't be the same. How is it different for if the controlling prints are increasing?
Well, what does that mean then? If the controlling prints are getting bigger, what are they saying to you?
They just need to build more.
So what do you think is gonna, if they keep doing that, do you think the strategy for the day is to release the position or just keep building a bigger position?
To keep building.
That's all it is. See, The more they build, the greater the release needs to look. But more importantly is that release can only look that way. So how many times have you seen something build? Just for instance, BTCS, let's say it built all day and then it released and you saw 700,000 shares, 750, and you're like, oh, that's good, but not good enough. What's typically going to happen to that type of release bar? Is it going to be a release or is it going to be a trap?
Just a trap. It's unsustainable.
No, no, the opposite.
Oh.
The further you build, that release cannot be anything less than what it needs to be. If it's anything less than what it needs to be, it's a trap. So it's the opposite, not what the that bar should be more like 1.5, 1.6, 2 million and flying that way because they've built such a large position. It needs a large release. It needs consistent volume to get to money time, to get to targets. If that volume is nowhere near what it would need to look like for a massive position, it's going to be a trap. It's faking you into thinking it's going to go, but they still are going to take more of your shares.
Mm-hmm.
Anybody else? Any other questions? I've got time for one more question. Going once, going twice, and that is the close of session. Thank you all for coming in. Hope you guys got some nice information to take back with you. Watch these recordings again once Millen has them loaded. There's so much great information in these that can help you along with your trading and so forth. And you've got the whole week to plan any more questions. Get them into Millen so I can answer it and help you keep progressing in your trading. With that being said, you will have a lovely afternoon, and I'll speak to you